I learned it the hard way because I paid it off, and then I checked and I went, wait a minute, why is it showing this balance on my credit report? And then I figured out, oh, because that was the balance on the last day of the month.
Ah, got it. Yeah. So that's a trick I didn't know. So if that's really easy. So just to really make sure everyone is hearing what Todd's saying, look at your credit card statements, look at the statement date and pay it off like 3 days before that statement date. And that typically will be before the creditors are reporting it to the credit bureaus. I was also taught by another credit expert that you call them and you ask them when they're reporting to the credit bureaus, and you ask them to basically coincide your payment date with a couple of days before they report. And so then you're locked in and you don't have to really think about it. You just pay it on your payment date.
So our competition, our direct competition, Redfin, Zillow, and all these other guys with Realtor.com, they're spending money here. Well, where we win is if we go into the niches, into the long tail keywords, right? So here, I wanted to show you that. Let me go back to this, because as soon as the ad pops up, I click on it.
Hey, welcome LCA. I'm here with Todd Wilson, and today we're talking about turning your credit into an asset that can save you money and make you money. This is a really amazing session about finance and credit. And Todd, would you like to give us a little bit of your background?
Sure. So I started doing mortgages back in 2001, and as you get in the mortgage industry, you start learning about credit, and you get to a point where you think you know credit. You go, oh, I know all about credit. And then something like 2008 hits and everything just goes down the tubes. I lost literally everything: foreclosure, bankruptcy. It's like my income dropped 80% from 2006 to 2007. So I had to kind of reinvent everything. And at that point, I had been making good money. And so all of our bills and all of our debts were based on that income. And of course, when that income was gone, there was no way to pay the bills. And so that was why we ended up in bankruptcy and foreclosure. And so I went, okay, that's it. I'm not going to use credit. And so I didn't use credit at all for about 3 years, figuring that that's what had gotten me into trouble in the first place. And then I started to realize how much it was holding me back, because I couldn't buy a house, I couldn't buy a car, I couldn't even rent a car, get a hotel room without a lot of trouble. And so I decided I had to get back into the credit game, but I didn't know how to do it. And so I started calling up, friends and colleagues that supposedly knew about credit, and most of them had the same rudimentary knowledge of credit that I had before, and so they didn't know. And so finally, I talked to a friend of mine. They said, "Okay, well, here's how you get your first new account." And I didn't think it was going to work, but I didn't have any other choice, and I had nothing to lose, so I tried. And lo and behold, I got approved. And I was like, great, I got a credit card, but I'm not going to screw it up like I did before. And so, I used it for small purchases, and then I would pay it off every month. And then after a few months, I checked my score, and it was actually higher than it had ever been before.
Wow.
And
just
I went, okay,
a couple months.
Yeah. And so I went, okay, I'm onto something here, but I knew I didn't know everything. So I had to do a lot more research and find out what everything was going to do. Like every action I took, what was that going to do to my credit score? And so I did.
I love that story, because I think a lot of us agents that survived that crash faced a lot of financial issues, and we came back on top. So this is I think a very relatable story to a lot of people. You filed for bankruptcy, you faced a foreclosure, you just wanted to be out of credit altogether, and then you said, well, but credit's tied to everything, like top jobs and renting a car, hotel. So you got back in, and then I love to hear this next part, because I know you're about to get to it, on how you learned on cracking the code and the secrets that you have for us, because I know before we broadcasted, I know a lot of our viewers are going to want to know the ins and outs of credit, and I know you're going to get there. So what happened to get you to learn all of this information?
Well, really, it was a lot of information from a lot of different places. And I'd find a piece here, a piece there, a piece there. And as I was putting it all together, one of the things that was really, really shocking that I found out kind of changed my whole outlook on it. And there's like thinking with how many adults there are in the US, and it's, about 250 million, right? And out of those, there were 87 million that were considered to have bad credit. Bad credit is below a 660 credit score. Now, I personally, as a loan officer, I don't consider that bad credit, but in the eyes of the credit bureaus and the banks, that's bad credit. But then I kept doing my research, and I found out there was another $45 million, another 45 million people that had no credit score at all. You put those two groups together, that's over half the adult population has bad credit or no credit. And when I realized that, I went, okay, this can't just be for me. I have to share this information. So the whole project of figuring out how to make sure I didn't fall into the credit, canyon again, really changed to now I need to share this information, because not only was I not alone, but I was in the majority.
That's insane that half the population is in that category. I didn't realize it was that high.
Yeah, well, and the credit bureaus don't tell you this. They just say, well, the average credit score is, whatever it is now, like 707 or 709 or something. They're not even counting the 45 million people that have no score. Because once you get below a certain point, you don't have a score. It's impossible to get that lowest possible score, just like it's impossible to get the highest possible score. You can't get a 300, you can't get an 850. And so if you're at 300, you have no score. And so those people are not counted.
So take me back. So what year is this as you're discovering this information, and where else did you find some useful information about improving your own credit?
This was probably about 2013, maybe 14 when I found that out. And I was like, oh my God.
Wow.
And
so sometime after you got that first credit card. So this is what, 5 or 6, 7 years after that point?
No, it was actually only a couple years after, because that first credit card I got was
3 years after.
Yeah, 3 years after everything, just like the wheels fell off the car. So it was probably, I would say it was about 5 years after everything fell apart completely. So 2013, maybe 2014.
Okay.
And then I kept checking to find out, okay, what else do I not know? And really looking at credit reports, and then, getting, as I talked about it more, I learned more from some other people that knew other little bits and pieces. And I was like, oh, that's interesting. I'm going to try that. And sometimes it worked and sometimes it didn't. I mean, for example, one of the things that, people say, well, yeah, just, pay off your card before the end of the month and your credit score goes up. It's like, well, maybe it's true, but it depends when that creditor generates their statement.
I would love to talk about that. So I've heard from other credit experts that same thing. So just so you guys have background on what Todd is mentioning right now, every single creditor reports to the credit bureaus at different days and times. And so if you're paying it off every single month, if it's not coinciding with that date, your credit score still could be affected, even though you're paying it off every single month. So that's a really great secret on doing a credit score bump. So what is your recommendation for borrowers that you come across and they're paying it off every single month, but they're missing out on that credit score bump because it's not coinciding with the creditor's reporting date? What do you recommend they do?
Well, the first thing to do is check what's the date on the statement. So if the date on the statement is the 23rd, then you go, okay, I'm going to pay this off on the 21st. So pay it off a couple days early, pay it online so that it's, pretty much instantaneous. And that way, when they generate that statement, it now shows a zero balance, or maybe a small balance if you charge something in between, or maybe something wasn't there yet. But what you're doing is you're checking the balance on your account, not what the statement was. So if you have a $5,000 credit card and you charge it up to $4,000 every month for whatever, whether it's business or personal, and then you pay it off. As you mentioned, if you pay it off after you get the statement, it's going to show up on your credit report that you owe $4,000. And I've had a lot of clients tell me, oh, well, I don't owe anything on that card because I pay it off every month. I'm like, well, that's great. But the banks are going to look at that and say, well, you do owe something because I can see it on your credit report that you owe $4,000.
Mm-hmm.
And so paying it before they generate their statement eliminates that. And then now you do get the benefit of paying that off and showing up on your credit report. So now you have the higher score. And I've seen it make a big enough difference. Like I had one client that he was doing that for his business. He had a $5,000 credit card and he was charging stuff all month, and then he would pay it off when the bill came. And he was almost every month pretty close to his limit. And so we needed to figure out, okay, we need to get your score up. And so he paid it down. He didn't pay it down to zero though. He paid it down to $100. And that gave him the highest score possible. And his score jumped 30 points.
That's interesting. So why didn't you recommend that he pay that last $100 off?
Well, because there's this little weird thing with the credit bureaus and the credit scores where you actually get more benefit from having a small balance than no balance on your revolving credit. It's stupid and it makes no sense logically, but it's the way it works.
Wow. And then can I have this probably is a stupid question, but I think maybe other people will have this in their head. When you said about paying it off before the statement is generated, how do we figure that out? Like, are we just waiting in the mail and then seeing when we get it in the mail? Are we calling the creditor and saying, when do you issue your statement? How are you determining that date?
Actually, look at the statement date on your previous bills, and I get them all electronically because otherwise you end up with a stack of mail that then you have to sort through your mail. Mm-hmm. If you get all your bills through electronically, then all the stuff in the mail, almost all of that is junk. And so you don't have to spend as much time going through your mail. So it's a time saver too. But you look at your old bill and just see the date. What's the statement date? And it'll tell you, August 23rd to September 22nd. Okay, September 22nd is the statement date. So I'm going to pay off on the 19th of October. And then there are exceptions though. I have one card with a credit union, mm-hmm. and they do generate their statements on the 23rd of the month. But what they report is what your balance is at the last day of the month.
Mm.
I learned it the hard way because I paid it off and then I checked and I went, wait a minute, why is it showing this balance on my credit report? And then I figured out, oh, because that was the balance on the last day of the month.
Ah, got it. Yeah. So that's a trick I didn't know. So that's really easy. So just to really make sure everyone is hearing what Todd's saying, look at your credit card statements, look at the statement date and pay it off like 3 days before that statement date. And that typically will be before the creditors are reporting it to the credit bureaus. I was also taught by another credit expert that you call them and you ask them when they're reporting to the credit bureaus, and you ask them to basically coincide your payment date with a couple of days before they report. And so then you're locked in and you don't have to really think about it. You just pay it on your payment date. Would you recommend that they do that also?
You can do that too. Most of us are pretty busy, so calling up your credit card companies on the phone may not fit within your daily routine. But if you do everything electronically, which I do recommend, do everything electronically, and that way, you save it to a folder in your computer, just like if you're saving a file for a real estate transaction. It's all in one place. You got your cell phone bills. They're all in, whether you have AT&T, Verizon, T-Mobile, whoever, that's one folder for that creditor. And then you got, your whatever, B of A card, Wells Fargo card, each one of those has its own folder. And then you save the statements in there. So you've got your record of it. If you make a payment online, if you want to print out the payment receipt, save it in that folder. That way, if there's any issues with, not being able to find something, you've also got it on your computer.
Awesome. So we've got a couple of good tips so far. We've got, pay down your balance and still keep a small amount on your cards. And we've got to make sure that you pay off your balance before the reporting date, which is based upon the statement date on your credit cards. What else can we do, and what else can we offer to our buyers before they get their credit pulled with you, so that we can boost that score up?
Well, I'll tell you, the number one thing that people really should do is they should know what's on their credit report. And I know, you get all this, freecreditreport.com, which personally, I think that one's a waste of time because it doesn't give you a score. If you go on there and you want a score, then they sell it to you. But you can actually get a free account with Experion, and it'll give you their score. And it's not necessarily it's definitely not going to be the same scoring model as what is used for a mortgage or a car loan or anything you're applying for. They've got all these different credit scoring models. So you've got a specific one for mortgage, you got a specific one for credit cards, specific one for cars, and then you've got the ones they sell to the consumer. So the one they sell to the consumer, it gives you an indication of what your score is going to look like. And you count as an inquiry. As I said, it's a free account, so you can check it anytime you want and see what's on there. You can kind of predict. So once you have the information of knowing what you can do to kind of manipulate your score, then you don't have to, wait. You can look at your Experian, you go, okay, this is what it is. I can see what's on there. Now I know what to handle. It also gives you kind of an early warning if somebody's charged something on your card that wasn't you.
So get a free Experian account, because it
Yes.
at least has a score, and at least you can look at that, make sure that it's accurate, and then also pull the other ones, TransUnion and Equifax, and make sure that they're accurate.
TransUnion doesn't have the same options that Equifax and Experian have. I find Experian to be the most user-friendly, but TransUnion doesn't offer it. You can buy a credit report from them, but you can't have an account where you can look all the time. They don't offer that.
Okay.
They certainly don't have anything free. And I'm like, TransUnion, what gives? You guys just don't care about us? Oh, wait, that's right. It's a credit bureau. They don't care about us. It's all about making money.
So now I've pulled my Equifax, or I'm sorry, Experian, because it's the most user-friendly, it's free, and I see some errors. Now what do I do, Todd?
Now you can actually dispute anything that's incorrect on your credit report online. That's the fastest way to do it. All three credit bureaus have that set up because they have to. And you just dispute, and any documentation you have, you can submit it right there online.
Okay, awesome. So is this through the Experian website that you're doing this?
Yes.
Okay. So you're shooting the disputes directly through the credit bureau. Now, once you sort of dispute it with Experian, do you have to do the same thing with the other credit bureaus, or are they just going to see that
Yes.
and take it off?
So
So
you have to do it with all three.
Okay. Very, very good. That's really simple now. I remember when 10 years ago we were taught to send out letters. So no more need to send out letters.
Right. Yeah. Don't send letters. I mean, there's another reason not to send them too. It's you don't know if they received it. And I haven't had to do this. I haven't had to, submit anything online to dispute anything on my credit report. But I would assume, like most other things you do online, you get some kind of automatic response. Your request has been received.
And then, so what else? So we've got making sure that you know what's on your credit report, disputing mistakes on your credit report, any inaccuracies. is there anything that they should look for specifically that's inaccurate that could be keeping their score down?
Usually it's going to be if there's any late payment, but you could also have unauthorized charges, and that's really the other big reason to look at your credit report to see, okay, are these balances make sense? And you can see the same on when you log into your accounts for each of those credit cards too. Or if there's an account that's not yours. I mean,
anything else I'm looking for? I mean, what about my name is spelled wrong? Is that something that I really need to be concerned with?
no. I mean, names get spelled wrong all the time. I've got a pretty bland name. I've seen it spelled wrong. It's like all of a sudden there's 2 L's in Wilson.
Or like, one D in Todd, right? Yeah.
Exactly. Or they have some, middle initial in there. And I'm like, well, Todd's my middle name. So there is no middle initial between Todd and Wilson.
So then what do you typically do with borrowers or people that you're consulting through this process? So they identify the mistakes, they dispute them. Is it automatic that they remove them, or how's that procedure work? Have you ever had people that disputed them, it wasn't effective and had to go through a second or third round of disputes?
Yeah, most of the time I don't see a lot of stuff that's really in error, but most of the time, if there is something that the borrower thinks is wrong, it's usually a payment. They say, oh, no, I paid that on time. I mailed the check on the 30th. It's like, well, if it wasn't there by the 30th, then it's going to be late, And so most of the time it's actually their mistake or their assumption that, hey, they shouldn't ding me because I was okay. And most of the time, the best way to handle something like that is actually call the creditor. Because if you've never been late and you have one late payment, you can always go to them and say, hey, it was a mistake, or I thought that I'd sent it, it came back in the mail, whatever it is, and just ask them for that one exception to remove that late payment. And if it happens all the time, of course, they're not going to do it. But if you've had an account for a few years, you've never been late, and all of a sudden you got a late payment, you got a fairly good shot at getting it removed, and much better than if you paid somebody to do credit repair.
Now, I thought that it was only a credit ding if you were more than 30 days late. So if you're 1 day late on paying something, I thought there was a grace period, right? You just pay the late fee for your credit card, right?
Oh, no, you're right. I'm saying, like, if the payment was due on the 1st, but if it had been made by the 30th, then it's going to be considered a 30-day late. So you're absolutely correct.
Okay, got it. And then, so when you're looking at this from a buyer's credit report, borrower's credit report, and now you've gone through the disputes, what else can we do to bump up that score?
Well, and this is something you and I talked about before we came on, is the authorized user, which is, it's kind of a double-edged sword. So there's a way to do it correctly and a way to do it incorrectly. And to put it simply, an authorized user is when somebody is added onto somebody else's account without having to qualify. So for example, I have a credit card and I want my son to be able to establish credit, and getting your first credit card isn't easy. You have no credit score, so you're going to get the worst card with the highest rate, possibly the highest annual fee and the lowest limit, and really you can't do much with that. So I can add him onto my credit card, and then all of a sudden he's got credit because everything on the entire history of that card is now on his credit report. So he instantly has a credit score as soon as they report that next month. And you can do that to boost your score. I actually had a friend of mine that, he said, yeah, my credit score is like, I think it was like 620. And so I told him about this. And so he got added onto somebody else's account. It's a very close friend he has. Usually I recommend family or a very close friend, not just some stranger, because there are companies out there that will sell this. They go, oh yeah, well, we can add you on as an authorized user. We charge, and I forget how much they charge, but I had a client come to me, they had already done this, and they spent like $2,000 to get added on as an authorized user. And I'm like, okay, so you get paid $2,000, you got added as an authorized user to somebody's account that you don't know, and you had to give them your social to get added onto that account. So
Wow.
how secure is that? But if you do it with a friend, like a very close friend or a family member, it's a lot safer. And so that's where I was talking about the double-edged sword. You can either pay for it and do it where it could come back to bite you, or you could do it with somebody that's close to you. And the worst thing is that maybe they make a mistake on their credit card.
Hmm.
But the cool thing about it is you can also be removed, and then that account just goes away. It's no longer on your credit report at all. So if you think grandma has this great credit, she's, oh, sure, I'll help you out. I'll add you on. I've got this credit card. I've had it for 30 years, never had a late payment. And she adds you on. And what she didn't tell you is that, yeah, she's got no late payments, but she's got a $5,000 limit and she owes $4,900 on it. So now your usage is really high, and that's going to drive your score down. So you can go back to the drawing board and get removed from that account, and it's as if it never happened.
Hmm. Okay, so double-edged sword. So you get the good and the bad from the person that you're being added on to as an authorized user, but it disappears as soon as you take it off. So in your example, if grandma charged her card up $4,900, then we just get removed. It's like it never happened.
That's right.
We can start over. We can call her.
That's right.
Grandma.
Exactly. Start over. Talk to your other grandma.
So I was always curious about this term, and I'm wondering if it's real. So what is a rapid rescore, and is that something that's real?
It is real. And what it is when you've got something that could change on a credit report, whether it's changing a balance or removing a late payment. Basically those are two things you're going to see. And instead of waiting for that creditor to report on the next go around, you pay extra to the credit bureau, or not credit bureau, but the company you pull credit with. Like we use Credit Advantage. And so we pull the report with them. We look at it, and this guy says, oh, I can pay that card down. We go, okay, great. And so we do the rapid rescore. They pay the card down, and then Advantage contacts the creditor to verify that that balance is now down. And then they communicate with the credit bureaus to get the correct balance showing on the credit report. And then the score goes up, and usually takes 5 to 7 days to do that.
Can we also talk about like number of trade lines that you recommend and types of trade lines that someone should have, and how that impacts their credit score?
Absolutely. So the number of trade lines is, the credit bureaus will never tell you how many you should have. But what I can tell you is one is not enough. Ideally you want to have a mix, where you've got revolving and installment accounts, because you can actually get dinged for having only revolving. Which it doesn't mean that you can't have a good credit score. And you get somebody that all they've got is revolving, they can still have a 750 credit score. Okay, that's fine. They don't have to go and buy a car just so they have an installment account, or get an unsecured loan just so they have an installment account. It's not necessary. But in the long run, it's good to have these different types of accounts. And of course, the mortgage is in that mix. So ideally, yeah, you're going to have a mortgage or two. You're going to have, an installment account or two, and 3 to 5 credit cards. I don't recommend having more than that, although I've seen people with 10, 15 credit cards and still having a really good credit score. The mistake you can make is having balances on 15 or 20 credit cards. I actually did have an application from a guy that had 37 revolving accounts, so 37 credit cards, and they all had balances on them. He didn't have high balances, but just because he had that many, it was driving his score down. And it's one of the few times where I actually said, look, you really need to pay some of these off and just close the accounts. And particularly the ones you want to close are your department store accounts, anything where you can only spend it at that one place. It's not really a good account to have because you can only spend it at the one place. Your Macy's card, you can't go out to dinner on it. You can't rent a hotel room unless Macy's suddenly opens up a hotel, which I don't know, they might be planning to do it, but I wouldn't expect it. And then, those cards also tend to have the highest interest rates. And then the other type of account you don't want to have is what's called a finance company account. And, you know, usually you don't find out until you've opened one that it's a finance company account. You can tell because that's in the name of the company is finance or finance company. But some of the clues are like you go to buy furniture and it says no interest for 12 months. And then they go, okay, well, yeah, we can do this account for you. Open up the account and now you got a finance company account. And another thing they don't tell you about those is if you don't pay it within that 12 months, the entire balance, they're going to charge interest from the beginning. And the rate is also going to be higher.
Yeah, you got to read that fine print when you're getting the 0% financing for a year or two. Can we go back to what you said? So you said, hey, recommend that you start canceling like the department store cards and things that are from finance companies. I was told and taught that new accounts versus older accounts matter, and when you're canceling because if you cancel an old account, you also cancel and erase all of the credit history if you paid on time. So how do you walk someone through managing that? If that Macy's card was their first card that they ever got at 18 or 20 years old, and they've got 10 or 15 years of history on it, and they always paid on time, are you still recommending that they cancel that?
No, I wouldn't recommend they close that account. And you're right. And it's actually each individual credit report is going to have its own unique plan on how to get the scores as high as possible, because everybody's going to have their own situation. I mean, just as you pointed out, the guy's got the Macy's card for 15 years and he's got perfect payment history on it. You know, you may only have a $500 available credit limit on it, but you know, okay, so he's got a $500 available credit limit on it and he uses it, you know, once every 6 months to buy a shirt. Okay, keep the account, you know, then you're good. But yeah, everybody's gonna have their own plan. So the one I was talking about where I said, you know, close these accounts was the guy with 37 revolving accounts that had balances.
And he probably had some other accounts that were just as old with good credit history also. So that impact was not that big on the Macy's card.
Right. Well, and for him too, he had a lot of new accounts because it seemed like every time he went to a store and they said, hey, you can get 10% off if you open a credit card with us, he would say, okay, let's do it.
Wow.
And I mean, how much are you going to save in one day at Target? You know, I mean, yeah, you can spend a lot of money if you really try, but was that the intent in the first place?
I know the title that we have for today's webinar is how you can save money and use your credit as an asset. Can you help quantify like as a lender, can you tell me like what's the lowest qualifying credit score program that you have, whether it's conventional, FHA, VA product, maybe some kind of down payment assistance program, and then if I had stellar tier 1A credit, like what is the difference in interest rate, and then on an average, I don't know, $500,000 or $600,000 house, like how much difference in payment is someone saving by having better credit? Can we go into that a little bit?
Yeah. So now I'd have to actually run the numbers to give you, you know, anything more exact than what I'm going to give you. So that's my disclaimer. So
no one's going to hold you to these numbers. It's just,
I can run them for you on a specific scenario with no problem. But for our purposes right now, so I do have an FHA program that go down to a 500 credit score, but not everybody with a 500 credit score is going to qualify because there are other things that they're going to look at. You know, it's like, okay, has the guy's housing payment history been good? Does he have enough income? You know, because a lot of times when somebody has a 500 credit score, it's an income situation as much as anything. So, you know, but I did do a loan recently for a couple where they had credit scores that were in the 540s. And we got the FHA loan done, you know, and their rate was about 1.5% higher when you also factor in their mortgage insurance compared to what it would have been if they had gotten a conventional loan. And so that can make a pretty sizable difference in the payment. I mean, you know, $500,000 loan, I mean, you could be talking, you know, $600-700 a month.
Wow.
You know,
And so that's $6,000 or $7,000 a year. And if they hold this for 5 or 10 years, that's a big chunk of change.
It is a big chunk of change. And then I also do hard money loans, and on those we don't have the credit score minimum. I've literally done credit scores, in the 470s, this year. But those guys are paying 12%. And even though it's an interest-only payment, at $500,000, that's a $5,000 a month payment. So, it's expensive. So if those people get that loan in order to solve a problem, and then they handle the problem and then handle the credit, then they can save, $2,000 a month on their mortgage payment, potentially.
Wow. Yeah. Yeah. So guys, like, I hope you guys are hearing what Todd's saying, and I hope you guys are going out there to your borrowers in the community, your buyers, and getting them to really look at their credit, because if they're not getting the best rates available, they could be spending more money than they have to. And it's better to really look at this and save that money, because it's going to compound a lot over time. Todd, can I also ask you about, bankruptcy and foreclosures and how long those stay on the credit, and what kind of impact those type of life events happen on qualification? So if you have a borrower and they file for bankruptcy, how long before they can buy again? And if they file for foreclosure, how long before they can buy again?
So it's going to depend on the type of program, and if they're buying their primary residence or a rental property. Now, Chapter 7 bankruptcy, which is the one where it just wipes out the debt, that will stay on your credit report for 10 years. A Chapter 13, which is where you have a payment plan, and some of the debts are most likely wiped out. Otherwise, why would you do it? Just go with the 7, right? But if you do the 13, then it stays on for 7 years from the date that it's filed. And lenders look at the date it was filed for the most part, not the day that it was discharged. Now, there is a difference, though, on the 13 on how you get out of it, because you can discharge it, meaning that you paid all the way through and paid it off, or you can dismiss it. Sometimes people will dismiss it, and then that just means they didn't follow through. They just quit the program. Now, in that case,
go ahead.
In that case, lenders are going to look at the date that they dismissed it, not the date that they filed it.
And so 7 is 10 years, 13 is 7 years or less, depending on the other things that you mentioned. But let's go back to when can those borrowers buy again? Can they buy a week after it's discharged, 2 years, 5 years, 10 years? Do they have to wait until it's off the credit report?
They don't. So depending on the loan program, you could, if you're using an FHA loan, 2 years after your bankruptcy.
Okay.
You could do it. And in some cases, 1 year if they're what they call extenuating circumstances, death in the family, divorce, major illness, these kinds of things. The good letter of explanation where the lender can say, okay, well, that makes sense. And they can make the exception and go down to 1 year.
Wow. So how do we inquire about those exceptions? So if we have a client that had a bankruptcy 13 months ago, and it's one of those situations that you described, do we just talk to our local loan officer? Do we call you? How is this something that everyone should know about?
Yeah, everybody should know about it. Absolutely. Because most people think, well, because he had a bankruptcy, you have to do hard money, which is absolutely not true. I mean, even if they don't qualify for the FHA loan, there's also the non-QM. I don't know if everybody's familiar with what that is. It's a non-qualified mortgage, which basically is the old subprime revamped so that it's not the old subprime. So it's, you don't have fixed for 2 years, a 2-year prepay penalty, then the rate jumps 3%. Most of these are 30-year fixed, no prepayment penalty. Yes, the rate's higher, but you also make sure the borrower qualifies for the payment so he can afford it, so he's not getting into trouble like we saw, before the whole meltdown.
So more exotic loans. I know what a non-QM is, but maybe can you describe it? Maybe more exotic products, more specific products, without the predatory stuff that was there before the subprime meltdown and the mortgage meltdown of 2007.
Right. Yeah, and so those programs, you can actually get one day out of bankruptcy. You can qualify for a mortgage. It's just going to be more expensive. And after 1 year, they go, okay, well, 1 year, it's not as expensive. After 2 years, it's not as expensive. After 3 years, it's not as expensive. So you've got like varying stages of what it's going to cost. But just because somebody's had a bankruptcy, it doesn't mean that they can't qualify. And so, number one, if you've got loan officers that you're working with, you have a guy that like, this is my guy. He does everything for me. He's great. Ask him. And if he can't help you, ask me. That's what I'm there for. My main focus is on alternative financing. And of course, I can do the conventional, I can do the FHA, but the area that I focus on is the stuff that most loan officers are like, yeah, I don't do that.
Wow. And so same question about foreclosure. So what does that look like to again get back into a house with a mortgage after a foreclosure?
Foreclosure, I actually have to check on that because I haven't checked recently, but I believe it's going to be 3 years for FHA and 4 years for conventional. But if it's an investment property, then it's 7 years for conventional. Otherwise, you got to go with the non-QM or hard money.
Okay. Yeah. So, wow. So I think a lot of people out there, and we got to spread this gospel and this information. A lot of people really believe as long as it's on my credit report, I can't buy a house.
I know. And it's a shame because I've heard people say, oh, this is going to be in your credit report for 10 years. You won't be able to do anything until then. And it's just not true. And that's one of the things that, I try to do is dispel the myths about credit. And that's one of the big ones. Another one is don't ever have anybody pull your credit because it's going to kill your score. It's like, well, credit inquiries and new accounts combined make up 10% of your score. So when somebody says they pulled my credit and my score dropped 70 points, right away, that's not what caused it.
Yeah, can we talk about that? So hard and soft inquiries, how long they stay on the credit. So I've heard different things like when you're applying for larger credit, the credit bureaus give you some leeway. So how does that look?
Okay, so there's several parts of this one. So we'll start with how long they stay on your credit report. So they stay on your credit for 2 years, but they only affect your score for 1 year. And so they can see that you had these inquiries, but after a year, they make no difference. So if you, applied for 15 credit cards last August, like August of 2021, by now they're having no effect on your score whatsoever.
Wow. And so what's your recommendation when people are shopping around for a big purchase, like a mortgage specifically, because that's the space that we're in. That's the space that we care about. So
for mortgages and car loans, you have this window where all the inquiries count as one. And depending on what credit scoring model is being used, it's either 2 weeks or 45 days. And so because we don't know exactly which credit scoring models they're going to be using, and mortgage tends to be on some of the older models, I tell them 2 weeks. Do all your shopping in 2 weeks if you can. If you can't, you're going to have another inquiry. Chances are it's not going to make a huge difference, especially if you already have good credit. Then it's not something to worry about. You just don't want to go and, apply for a credit card, apply for a car loan, apply for a mortgage, apply for 3 more credit cards, get an unsecured loan. You do all this. Yeah, it's not only are mortgage lenders going to say, hey, what is all this? What are you doing? Are you going down the tubes or something? They want to know what's happening. But then also it is going to have some impact on your score when you keep on having your credit pulled that many times.
So if our audience out there watching this wants to get in touch with you, wants to work with you, what's the best way to get them in touch with you?
The best way is actually, call me. I love to talk to people because then you can actually get the question answered, the question clarified, the answer clarified. So the best way to reach me is just call me on the phone, which is my number is 707-401-8080.
That's not too bad to remember. And then your website is crackmycredit.com, correct?
Right.
And when they go there, what are they going to see?
They're going to see, my book. There's a little video on there of me telling a little bit about, my journey on credit and, buy the book. There's a bunch of other stuff on there I'm in the middle of revamping it. So that's going to be changing probably in the next month or two, just depending on how much time I have to devote to that while I'm doing mortgages.
Wow, very cool. And then so I'm interested in getting your book. Can I find it on Amazon also? Is it just through your website?
Absolutely.
Okay, so it's on Amazon. And so what am I going to get when I get the book? Am I going to get some of these tips and more on credit also?
Absolutely. You're going to get a full breakdown of everything that goes into your credit score. Plus, you're going to get a lot of data you won't find on the credit bureau websites, and how these things work together, and how to handle certain situations. I mean, like, for example, there's even a chapter on divorce, because I couldn't tell you how many times over the years I've had clients come to me after a divorce and their credit is ruined.
Oh yeah. Because you are legally separated, but you are still financially married to that person if you don't do it right. So yeah, that's a big deal.
Yeah. Well, and a lot of times I've seen one of them supposed to make the mortgage payment on this house, and they say, well, I'm not living there, so I'm not making that payment. And then it ruins both of their credit score, their credit. It's needless.
Mm-hmm.
But if they both understand, look, if we can get through this somehow amicably without ruining each other's credit, or creating further rift, especially if there's kids involved, there's always some family or friends involved, make it as easy as possible, then you can walk away and not have such a huge, what's the right word I'm looking for,
A mess.
yeah. Exactly. Disaster.
Yeah. So I'm interested in getting your book, and I'm going to tell the audience why. So there's a lot of credit report books out there, but Todd's book is speaking directly from a mortgage lender's point of view, a loan officer's point of view, on how he has personally helped a lot of borrowers to repair their credit and get into homes. And that's why I'm interested in reading your book. Is it a big read? I'm not a big reader. I like audiobooks. So is it like 200 pages, 500 pages?
It's 112 pages, I think.
I can get through that in a day. Okay.
Yeah.
All right.
Well, and I specifically wrote it so that it was readable, because I understand credit is not one of those subjects people go, oh, I can't wait to read a book on credit, because it can be a very dry subject. It's like
I'm in that
reading a
category,
textbook.
I am interested in reading a book about credit.
No, I get that, but I wrote it with that in mind, of like making it so that you could read it. And actually, a friend of mine called me a couple of weeks ago, and we got to talking, and I mentioned the book, and he bought it that day. And it showed up a couple of days later. He sent me a photo of it. He said, I got the book. And then that night he called me and left me a voicemail while I'm sleeping. He says, dude, I couldn't put it down. I was like, that is probably the best compliment you could give somebody that wrote a book, is that you couldn't put it down.
Yeah, that's very cool. Yeah. Awesome. Any last minute thoughts you want to say that maybe I haven't asked you? Anything to help out the audience, if they are maybe buying a house themselves as borrowers, as people that are in the market, or that they can supply to their borrowers and their clients?
I mean, there's just so much, obviously. Just to keep it as simple as possible, I would say really be willing to confront what's on your credit report. Because, I mean, we've all talked to people that you ask them, hey, do you know what your credit score is, or what your credit looks like? Oh, I haven't looked at it in years. And because they're afraid to see what's on there. Either that, or they just don't care. I mean, there are some people, they just don't care until they need it. And then it becomes.
Let me add this. I think that this is the perfect market to reach out to your database, to your family and your friends, and to people that are out there that have credit issues. This is a great market for them to improve their credit and get into the market while the market is shifting. Because, hey, look, guys, you don't want to do this when prices are going up 5-10% a month. Like that's not the market to do this. And let's just do this now while the market is shifting, and help these people in the houses.
Right. Well, and the other thing that we didn't really talk about, but was part of the subject, is how to make money by having good credit. Is that?
Oh, let's talk about that. I think that's important too.
Yeah, because a lot of I mean, everybody on this call is an entrepreneur, and we have to spend money on advertising or tools or whatever. And so having good credit means that you can not only pay less for things, but it allows you to buy things that you couldn't buy if you didn't have credit. And I'll just give a real simple example. So let's say you want to buy some advertising, you go, hey, this is great, but I don't either want to spend the cash on it now, or I don't have the cash on it, but I have credit. Let's say you've got $10,000 available credit and you're using $3,000 of that. And you go, okay, I've got $7,000 available. I can put $2,000 to use right now and, make money from it. But if you plan ahead, you look at that and you say, okay, I'm using 30% of my available credit right now, which is kind of that threshold for having good credit. Not that you can't have a good score with using more than 30%, but that's the threshold that's recommended. So instead of bumping it up to half, you go and get another credit card for another $5,000, or ask one of your credit cards you already have to bump up your credit limit. Now you've got $15,000 available credit. You charge $2,000, now you're at 33%. Still within reach of that 30%, so it's not going to kill your score or make it hard for you to get approved for something if something comes up and you need credit.
You have any other suggestions, ideas on making money with credit? I know we didn't touch about this, so I think it's important to maybe dive into this a little bit more before we get off the broadcast.
Well, yeah, the main thing is being able to buy things that are going to make you money. So anytime you buy something as an entrepreneur or business owner, you're going to figure out, okay, is this going to result in a bigger return than what I'm spending? And so if you have good credit, you can access funds to spend on something that's going to give you a bigger return.
Awesome. Thank you so much, Todd, for your time today. So much information. I can't wait to read your book. I'll probably text you a picture also.
Cool.
After I get it. Anyone have any questions before we jump off? Any questions from Facebook, Jake? No, we're good. Okay. Todd, thank you so much. And if you guys want to get in touch with Todd, again, crackmycredit.com, 707-401-8080. Thank you guys so much.
And also, because this isn't like a public forum, it's all, agents. I'll give you my email address too, so that, midnight, you're thinking of something you don't want to call, that's cool. I wouldn't answer anyway. But the best email address for me is loans@toddwilsonmortgage.com.
Loans@toddwilsonmortgage.com.
Yep.
Awesome, Todd. Thank you so much for your time today and your wealth of knowledge. I can't wait to read your book.
All right. Thank you very much for having me on, Felix.